Thanks for joining us. Today we're going to take a quick tour of fixed assets from Less Software, and we're going to go through a fixed asset lifecycle in a couple of minutes. And it's really kind of, where does an asset come from? They certainly don't grow on trees. They have to be either purchased or made. They may be part of a purchase order agreement. They may be part of a lease contract with your customer. So there's lots of ways that we could initiate or the creation of a fixed asset and why we're tracking it for what purposes. And then we're going to go through what that asset is, who is the accountable person for it, where is it currently deployed, and then how are we going to calculate its depreciation. So there's multiple methodologies in the application, and then we will talk about end-of-life scenario and from a disposal point of view. So it's a complete life cycle. So let's take a look at the software. Okay, so we believe that assets can have a relationship to each other. So in this case, we have multiple different things where we've, our computer upgrades for this year, maybe rental units or lease units out in the field with our customers, categorizing, like this is all the enterprise printing equipment we have. So these are user-defined, obviously. And then within that asset group, then we get to our very specific assets. So many assets relating to one, logical group. And when we drill in and look at an asset, now we're looking at that detail of one of those assets that belong here. So in this case, an asset is identified with a unique number. That may be a tag that is associated or affixed to the unit itself. Could be barcoded, and that could be a way to update these records or add these records to the application. If we're doing a vehicle, then we're probably going to want to record the vehicle identification number. So there's lots of different kinds of things about kind of what this item is. And then we start to think about, well, where did it come from? Where did we buy it? Where did it transfer from an intercompany transfer organization? Who manufactured it? What is that asset's serial number? And then are they offering us any kind of a warranty? So it's kind of like this is the asset, how we're thinking about it. And it belongs to a group. This is computer equipment and very specifically laptops. And we use these asset groups and subgroups to determine what general ledger account we would use when we send the general ledgers over to the accounting system. So they're very helpful with that. And likewise there, if you are a multi-company organization, then what is the company that we're actually sending these transactions? So if you have multiple sets of books, we're good with that. Where is this asset deployed? And is it in a specific facility or department? Who's the accountable person assigned to this asset? So we could call them up and say, hey, where is your laptop today? Do you have it? Let's do those kind of pulse checks with them. And then from a depreciation point of view, there are multiple schedules that are available against the application. So we support the following depreciation methodologies: a straight line, a longer-term straight line, a double declining balance, the sum of the years, units of production. So these are applicable. Maybe we use units of production for depreciation of a vehicle by mileage, where we want to front load some asset depreciation, use some of the years. And these formulas that you see here are tailorable. They're open. We can change the calculations for you. If you have a very specific calculation that you need in your business, we can actually change that calculation class for you. So our asset will depreciate on some sort of a periodic basis. It could be monthly, annually, quarterly, in this case monthly, what we paid for it, what we believe that residual value will be at the end of this, and then how long do we want to depreciate this unit for. So this unit has been was procured in July. It didn't go into service until August, and so that means we didn't start the depreciation until August. So our depreciation schedule here started in the month of August, and we did monthly for September, October, November, etc. And we just export out these journal entries in batch mode to your accounting system to do the offset GL account transaction against the procurement. And then as these are getting exported, your book value is being here. So the sum of the depreciation to date and the quantity of usefulness, or your book value, is this, that sum would equal the asset cost minus the salvage value. So they're always in balance at any one time. So it's a simple application to use, easy to load. And then we use the Salesforce.com dashboards and reports to understand like depreciation by department or project or asset itself, so we can kind of understand, you know, like asset group or relationship, and then maybe specific department. So we use the standard reports and dashboards to access that information. So it's full, it's complete, it's optionally integrated with our procurement module, and but that's completely an option. It is designed to be a standalone application built natively on the Force.com platform. So fixed asset management is part of a suite of enterprise applications published by Less Software on Demand for quoting, contracting, and recurring revenue model, order fulfillment, inventory, your procurement, supplier management, and fixed assets is one of those applications available for Less Software today, all available on the Salesforce.com App Exchange. Simply search for Less Software. Thank you.